We've got a very special guest joining in right now, Mr. Vallabh Bhanshali. Mr. Bhanshali, good morning. Great to have you on the show. Mr. Bhanshali, a pro-growth budget, transparent at that, expansionary in nature, and the markets are clearly in joyous mood. It's party time on D Street. Do you think the markets are justified in their reaction?
100%. Not because it will create incomes and growth and jobs all in one go, but something very big has happened. To my mind, this is the Article 370 moment of financial policy making or fiscal policy making in the country. I think what this budget has done, that it has broken the mold which had been there on our policy making for decades. This was a Bombay versus Delhi fight. And at last, Bombay people won't have to go to Delhi anymore because all that IMF, World Bank teaching that you may have $300 billion reserves, you may have $3 trillion reserves, but you must always make your policies in a certain mold. What this budget has done is, just broken those molds. That hell with the rating agencies. Obviously, I can use that language, government cannot. But in their mind, they've said that, look, enough is enough. So I think a country is an aspirational country, just as Kashmir was the issue, that either Kashmir belonged to India or it didn't belong to India. Just let's decide once and for all. So if India is a growth country, it has to take a risk with growth. That's what this budget has done, that let's take a risk with growth. And the 2020 provided a perfect setting for this. And so if you permit me, I'll talk about it, otherwise I don't want to go into a monologue.
No, please go ahead. We're all yours, Mr. Bhanshali.
So what 2020 did was provided two windfalls. The first was that despite continuous reforms by this government, they were not able to gel and create a momentum. So, but 2020 provided that because all those who had decided to join the reformed path, they benefited immensely from being in the system. So whether they were small or big. Second, 2020 also showed the correctness of the priority of our policy making, that, we first reached out to those who must be protected, which is large part of the country. So even that 500 rupees in their pocket and whatever else, food, etc., it created the right kind of pyramid. Instead of trickle down, we went bottom up. So by giving them succor, giving them some purchasing power, and then the reforms benefiting the formal sector, all those who decided to join the formal sector, the informal sector was so massively disrupted that they just left behind. But it's only the formal sector that can create investment, that can create growth, etc. So for years, this informal sector being too large, too disruptive, too political, etc., now will have to join the mainstream. So this was the first windfall. The second windfall was the China windfall, that we were not able to compete with China. We did not getting our mind share. But this C+1 policy has enabled India now to, get the early support that you need from the customers, from policy making, etc. So these two words showed that if India could have a 9.5% fiscal deficit and my rupee is stable, my economy is stable, my world reputation is stable, my bonds in the market, whether it be private or public, are trading all right. What are all these chefs telling me that, this will happen, that will happen? Because of that confidence that we managed a crisis so well, our finances so well, we created the right priorities. This government has now decided to really become independent in its mind and do this policy making. So this, I call it Article 370. I call this even bigger than 91. And that is because 91 reforms happened still in the World Bank and IMF mold. We were forced to get into those reforms. These reforms are a willful policy change by a democratic government. This is very big. It doesn't matter whether the index is 50,000 or 40,000, growth happens in 1 year, 2 years. It will all happen, no doubt about it. But we cannot always predict the future. So I'm happy to give, anyone, any Cassandra that, no, this might happen, that inflation might happen, but that's okay. But we have come out of that mold and we have come out on the basis of a track record. I think the track record has not gone waste. This is an amazing moment. I've seen policy making for 30 years and been in the markets for more than 40 years. I am extremely happy as a countryman today. Forget the markets.
Easier said than done when the prices shoot up 700 points in just 2 trading sessions. You've got to take them into cognizance as well. But anyway, that aside, Mr. Bhansali, this also gives a very right messaging to the FII fraternity. I mean, the fact of the matter is that from the March lows, it's FIIs which have pumped in all the money into equity markets. And the messaging seems very right to that fraternity as well for the markets to move up further.
So, well, see, FIs are investors like me. We will go wherever there is profit. We won't read the messages for too long. And the world is a complex place. But I think, being anchored in the right place and that, we want stability. Look at the several features. And, now I'm probably the nth speaker talking about the budget, so it may not make sense. But the credibility which came out of the budget, whether it was the FCI, whether it is correcting the custom duty structure, whether it was just a small thing, but, allowing that adjustment for advance tax for dividend receivers, it just showed a tone. These are the big messaging that this India is an independent India. It's a fair India. It wants investment. It is going to take a risk with growth. Those are messages, and what else can an investor want? So I think investors are going to buy that story that, well, this is as good as it gets. So I think question is, we must always pay attention to the price. Nothing is as good as it seems, or nothing is as bad. So to get carried away may be wrong, but not to read the messages and the trends, that would be a disaster.
Mr. Bhansali, good morning. Always a pleasure to have you. We've been waiting for this interaction for a while now. I'm so thankful that you were able to find time. Mr. Bhansali, so let's keep the stock market reaction aside. That's sentiment, that's liquidity. Let's talk about the India of this decade. We have everything in the melting pot, which is lower interest rates, a pro-growth budget, India's positioning much better than what world is. So what kind of India do you think we could be staring at? Will it move towards digital? Will it move towards infrastructure? How will the shape of the economy progress and change because of what is available on the table?
So first of all, we need to create a mindset. I think this year, all our performance will, break the budget estimates. Revenue, nominal growth, real growth, all of that will go, beyond the budget estimates. That creates the economic momentum that we were waiting for. As to our sectoral strengths, so clearly this government's emphasis on digital India and bottom up, that means the poor man must get everything, water, education, health, etc., etc. I think that creates a social equity or an equitable atmosphere. I think yesterday the way Finance Minister read out the number of, MSP purchases was extraordinary. I think that just shows where the government is heading. So based on the social equity, Nikunj, I may be too bullish. Maybe I am in an emotional moment. Maybe I like to check myself, but I think India has a chance to push almost all the sectors, beginning with the vaccines. We are going to get into this. We're going to the next thrust of pharma, that we were reverse manufacturing pharma. Now we are going to be front ending. Once we establish in the crisis like this that our vaccines work, that show that means we understand pharmaceuticals, we understand regulation, clinical trials, and blah, blah, everything. So beginning from pharma, IT, we are already well positioned. I think metals and others, etc., I think is a question of world markets. But whether Jindal Steel or Hindalco or others, now we are becoming lowest cost producers in the world. So I think the mineral sector, the mining sector, will have a real chance with more open policies that the government has, they have prepared a roadmap for the states and center to share, etc. And chemicals, of course, we are well settled. Engineering, I think we have an opportunity to get better. Indeed, that we don't have too many companies of credibility. So that's one very, very large area as Africa and other countries come up the curve. We have a great opportunity there. And the last would be, it just slipped my mind. So I think I would see several sectors based on this freedom to do business will emerge. prices, don't ask me stock prices because I think the market is in a frenzy.
Of course, I completely respect that. But the way you beautifully outlined what are the themes and what one should look at, I think it's quite incredible. One sector which we've not discussed, Mr. Bhansali, is financials. Now, that's one space where policy changes have happened. That's one space where migration is happening from small to medium and medium to large and large to mega. Is that the only sector where you think there is going to be an exception and the existing big banks will become bigger?
See, the first wave is like that because they are organized, they are prepared for growth, they grab it all. But in a free, that's the importance of freedom, in a free atmosphere, how the fintechs are coming and taking on the big boys. IBM got left behind by Microsoft and the rest, and so on and so forth. So I think this freedom, the sandboxing atmosphere, the sandboxing facility given by RBI, etc., we are promoting innovation very big time. So I think it's a matter of time that the formal will move first, but informal, NBFCs, smaller NBFCs, P2P, and the rest, they will also get their chance because, the big boys cannot provide the service. So AI, this, that, etc., whatever. So I think we'll get a chance. One other feature, Nikunj, I would like to add, and maybe I'm talking too much, is that if you look at the profit to GDP ratio, is probably one of the lowest in several years, maybe 20 years. And one of the big reasons for that was that the financial sector profits had just dried up. So State Bank of India can, when the NPA cycle reverses, probably credit cycle has bottomed out, their profit doesn't go from 3,000 to 10,000, goes from 3,000 to 30,000. So I think the profits that they're going to come in this sector and the share of profit to GDP once it corrects, these markets will not look atrocious at all. So I think the financial sector has to perform big time. And I will see that over the next 3 years, 4 years, you'll find all the other companies also have an opportunity.
Mr. Bhansali, a leaf out of your answer. You are of the view that this is a bigger reform than what we've seen in 1991, and that in a sense has been called as the biggest reform the country has seen in last 50 years. Now the starting point of 1991 was very different, both in terms of a macro positioning and also in terms of a global positioning. Now if a large reform has been unleashed on the growth front, then India's positioning is much better on the macro front, currency front, IT sector is with us, pharma sector is with us. So then exponential earnings growth, great things. I mean, I just cannot, I'm getting excited because in 1991 and those reforms changed India dramatically when the starting point was different. Right now the starting point is very much better than 1991. And if such a powerful reform is unleashed, what would be the end game?
So we should not get carried away. We must look at, the markets. So question is, if metal sector performs, there will be sectors who will be hit by it. So if we are going to push growth, there will be inflation. There will be inflation, the interest rates cannot come down. So one of the big, Lollapalooza or, what we call Goldilocks atmosphere where interest rates were low and so on, interest rates cannot remain low. So there will be a fallout of that also. So I think there will be this self-correcting mechanism. And as investors, we need to be very careful about it. So what happens is that the P of the market, which seems very large, when very big it's inflated, it seems, it starts getting corrected as earnings come. But the quality element of the P, which, instead of, I don't want to mention another country, but, some countries always have a low P because there's no stability, there's no, that element of P, quality element of P, quality and two elements of P, the quality element of P is here to stay. I think that is my takeaway. Growth will depend upon several factors and company to company. There will be no place for complacence. There's going to be so much competition. The finance minister talked about, that we want more banks. We are talking to RBI about it. I think it's superb news.
Aside from the budget, I'll take the liberty of talking about a trend which is there in the world. Look at Bitcoin. Look at how retail traders on Reddit, they've come back and how stocks are just going haywire. Silver prices, the way they have gone higher. Aren't these indications that we need to be careful, because there is definitely a mad rush which is happening like a herd which we've never seen before?
Definitely. I think a stock market is a dangerous place. One should always be careful. It's a fabulous place for the alert and the informed, dangerous place for the complacent and the herd. So there is no doubt about it, because everything has a pro and con. I just gave one example, or the high interest rates, or high metal prices, raw metal prices, etc. So I agree with you completely. Secondly, the geopolitics. I think we cannot underestimate the shenanigans of our neighbors. Not at all. And whole point is, I have, tried to say and convey in my own ways that the best way to fight China is to accelerate economic growth. Because China is not a military, it's not a military power, and they don't want to conquer the world like, the Second World War kind of situation. They want economic hegemony over the world. So if you challenge that with great policies, so I think this is a defense budget also in that sense, that we got to be cautious that if you start, say, becoming a very credible C+1 player, you have a large domestic market. You have, many features which China doesn't have. China is not going to like it. So I think the geopolitics is another element that I think we need to be very cautious about.
Mr. Bhanshali, coming back on the whole manufacturing space where we do not have global competitiveness, the government has rolled out PLI schemes. Can they be really effective? Because every country has a natural advantage. Like in India, you have a natural advantage towards IT. We have a natural advantage not towards biology and pharma, but chemistry. Manufacturing is something where we are lacking. But is that more like a cultural, societal, and the advantage of the Chinese which we don't have?
I would say yes and no. I think the kind of policy atmosphere we had for decades in this country, where excellence or innovation were not welcomed by, let me not use a very broad word, but whatever. So there were many things to check. So in this budget, when they say we are not going to disturb you on income tax, 6 years is a very long period in business where, you do not know your tax assessment has been finalized or not. 3 years is like, virtually soon after you have finished your assessment, you are free. It is settled. Now that kind of attitude, the PLI attitude, this reversing, all the duty structures, etc., are saying that, we want people to come into the mainstream, and we will give you all the protection that you need. In that atmosphere, if you look at an Ellen Mittal goes from India and becomes a steel tycoon. If you see a lot of Indian companies in their own ways, today, these are private investments, but, we have a drone manufacturing company in the country with most cutting edge knowledge. You would have read in the paper that military has placed an order on them. So this is to answer your question that, it is not a given that we cannot be competitive. To become competitive, we need competition, and you need freedoms to, do whatever you need to match the competition, which atmosphere I think has starting to, with this budget, the policy intent, which we were never sure, jaane do yaar, sarkar kya karegi. I mean, businessmen had that attitude. This is now saying that sarkar achha hi karegi. So I think I am bullish that over the next 10 years, it is not a given that we cannot be competitive in manufacturing also. We can be. See, Nikunj, I'll tell you, one of the problems that we all had, Delhi had a lot of people of that kind. We somehow think that if India had 27% of, the world GDP for decades together, that was something aberration. It was not possible. Why is it not possible that we can be 5-7% of the world GDP? We can be. Definitely we can be. And then for that to happen, it is not only financial jugglery. It will be that, after all, we have a mercantile culture. We have large young population. So we cannot talk about demographics and demand and democracy, all of that, and then have doubts all around. So I think legitimate doubts that you are raising is fine. But, endemic, no, something is wrong. How can that happen? That has to go. Sooner people drop it, the better it is.
So true, Mr. Bhansali. It's the approach and the attitude which really needs to be changed. Mr. Bhansali, having said that, large part of the wealth creation in last 5-7 years has happened in the private space. The unicorns are born there. Now, for an investor, some would argue that the tilt towards the startup space or digital space is somewhere they cannot participate. So for a public investor, the challenge is that you are left with a handful of companies which in a sense are at a different stage of their growth cycle, and the high growth companies are not really available for them to invest freely. Is that a challenge?
So I think, these are slow innovations, but I think time is ripe to start a NASDAQ in India. So, someone like BSE comes forward and says, all right, here is the new NASDAQ for, these kind of companies. Tweak the small companies. So you look at some of the companies, take a company like, Naukri.com, InfoEdge, or for that matter, India Mart. Those are, new world innovation companies. They're doing extremely well. Today, there are a number of Indians who are investing abroad, in all these fintechs. So it doesn't matter whether the companies are not listed here for various reasons. Given this new policy attitude, I think all those naysayers are going to be pushed aside. This budget has already said that we want to create a Bangalore-like or the world-class international IT hub. Maybe we need several hubs. Why not Bangalore also along with Gift City or some other place? So I think all those things will happen. So I think, yes, at this point of time, you're right that a lot of wealth is being made on the private side. But I think it's a matter of time. These are adjustments that keep happening on, lags and leaps will keep happening in a large, complex country like India. But I do think that in the next 5 years, you're going to see a lot of this wealth creation in India itself. Today, you are right, but not for all time to come.
Mr. Bhansali, 2 more follow-up questions. You understand the importance of cycle more than anyone else. Every 5 to 7 years, the composition of the index changes dramatically. It was commodity, then it was TMT, then it was back to financials. Assuming that a new wave has started, and if the starting point is somewhere March or April 2020 because of pandemic, 5 years forward, how do you see the shape of the Sensex or the Nifty changing in terms of composition?
Nikunj, if you could see it, it would start changing today itself. So it's not always easy because there are, management issues and leadership assets. Excuse me. But I think the smokestack has a big chance to come back. Smokestack has underperformed for a very long time. And so if you look at, large steel companies, metal companies, you look at their profitability, I think the party has just begun. So if you see, how Grasim and Ultratech and some of those companies are emerging, and, as growth happens, there will be large opportunity for these companies to, grow volumes, may not be profitability as such, and that's not good also, but the volumes can be fantastic. So, the whole sectors consolidation has already happened through IBC and so on. So I think there's a good chance that they will be a bigger performer. Pharma companies are rather small, but, pharma companies have another opportunity to, go up. IT can continue to. So IT's leadership in the market had gone down. In 2001, it was a different share. Today, it is starting to emerge, but sky's the limit there. Clearly, Indian companies have shown managerial capability and then technology capability. So I think 1 or 2 companies come up with something on innovation. Unfortunately, one company died, which had showed great innovation. So I think IT could be another sector. And financial sector is bound to participate. We must be cautious in financial sector that the margin that the banks enjoy today, the NIM, net interest margin, cannot remain what it is. Neither the regulator nor the markets will permit that. So they will have to be very innovative to make large profits, which is good. So customer will get better service, better price. So it's going to be an interesting world, Nikunj.
Closing comments, Mr. Bhansali.
Sorry.
How does a day start in Vallabh Bhanshali's new life? You're retired now, sir. You are spending a lot of time with Vipassana meditation. ET now is partnered with your foundation to bring out the concept of truth talks. So we want to know that what is keeping Vallabh Bhanshali busy these days? What is the new thing which he's doing in his new retired life now?
So I want to do more Vipassana. And what the other thing that I do want to see all democracies understand is that government is a tool for the citizens. It's not their boss. People have given up their right to, to just go and vote once in 5 years or 4 years, whatever, etc. is just no good. If you look at the speeches of Baba Sahib Ambedkar, Dr. Rajendra Prasad, as we were, adopting the constitution, they pleaded, they beseeched that citizens please be alert and please participate in democracy. There is a great statement by Ralph Nader, the great activist of US. He said, if you want democracy every day, citizenship is required every day. We need to become active citizens. So I have got one foundation which is trying to create activisms. The citizens have to be alert, informed, and active. Unless you have all three of them, all this nonsensical political gossiping and getting polarized is just no good for you. There are great dangers. We have seen countries like Turkey from, super respected country today to, a very different kind of democracy. I don't want to mention too many names and countries. It's not politically right. But you're seeing it all around that, how when citizens get polarized, they lose it all. So we need to be alert, informed, and active. That's my other engagement, Nikunj.
Mr. Bhanshali, on behalf of everyone from ET Now, a big thank you for joining us, and thank you for sharing your thoughts both on the economy and on the country and also on life.
Thank you so much, Nikunj. I spoke a lot. So please pardon me if I overreached anywhere. Thank you so much.